As mortgage rates hover near the highest level in more than 2 decades, homebuyers are turning to riskier mortgage products to help them get into a home. Last week, the average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances, $726,200 or less, decreased to 7.86% from 7.9%, with points falling to 0.73 from 0.77, including the origination fee, for loans with a 20% down payment, according to the Mortgage Bankers Association. That is still 80 basis points higher than the same week 1 year ago. Adjustable rate mortgages, which are considered riskier because the rates are fixed for shorter terms, offer savings. The average contract interest rate for 5-to-1 ARMs decreased to 6.77% last week, as higher rates continue to impact affordability and purchasing power. ARM loans increased almost 10% last week and continued to gain share, growing to 10.7% of all applications, said Joel Kahn, an MBA economist. The ARM share of mortgage applications is now at the highest level in nearly a year. Overall, mortgage demand, however, continues to slide. Applications to refinance a home loan fell 4% for the week, seasonally adjusted, and were 12% lower than the same week 1 year ago. Applications for a mortgage to purchase a home dropped 1% for the week and were 22% lower year over year. The impact of higher rates continued to be felt across both purchase and refinance markets. Purchase applications decreased to their lowest level since 1995 and refinance applications to the lowest level since January 2023, Ken added. Markets now await news from the Federal Reserve on Wednesday to see if there will be any relief from higher interest rates. At the highest level in nearly a year. Overall, mortgage demand, however, continues to slide. Applications to refinance a home loan fell 4% for the week, seasonally adjusted, and were 12% lower than the same week 1 year ago. Applications for a mortgage to purchase a home dropped 1% for the week and were 22% lower year over year. The impact of higher rates continued to be felt across both purchase and refinance markets. Purchase applications decreased to their lowest level since 1995 and refinance applications to the lowest level since January 2023, Ken added.
Brand management firms WHP Global and Authentic Brands Group are both interested in buying Champion from its parent company Hanes Brands, which is considering offloading the sportswear line amid pressure from activist investors, CNBC has learned. Hanes Brands announced it was evaluating strategic options for Champion in late September, a little over a month after activist firm Barrington Capital Group began pressuring the company to cut costs and generate cash as sales fall. At the time, Hanes Brands said those options could include a potential sale of Champion or another type of strategic transaction. It also said it could hold on to the brand. Hanes Brands has seen wide interest in acquiring Champion from a mix of buyers, including WHP and Authentic Brands, according to people familiar with the matter. Interested potential buyers include strategics and sponsors. The People said. Champion has estimated annual sales around $2 billion. The People said. A deal isn't close to completion, and if Hanes Brands moves forward with a sale, it's not expected to select a buyer until 2024, the People said. We are in the initial stages of evaluating strategic options and the right path forward for the global Champion business, and at the same time, remain committed to advancing Champion's new, disciplined channel segmentation strategy, energizing the brand and leveraging the work already completed to globalize product design and segment and streamline our supply chain, a Hanes Brands spokesperson told CNBC. WHP and Authentic Brands didn't return requests for comment. Goldman Sachs, which has been tapped as Hanes Brands' financial advisor for its review of Champion, declined to comment. Both WHP and Authentic Brands count a wide range of brands in their portfolios and would be well suited to add Champion to their lists. WHP recently acquired Bonobos from Walmart, and previously bought Toys R Us and Klein, along with Champion. It's also interested in buying Sperry from parent company Wolverine Worldwide, according to people familiar with the matter. Wolverine said in May that it was exploring a sale of the footwear brand best known for its boat shoes. The company didn't return a request for comment. Authentic Brands, which owns brands like Aeropostale, Brooks Brothers, and Juicy Couture, recently partnered with mega retailer Shine to sell a co-branded clothing line with Forever 21, among other ventures. Neil Saunders, a retail analyst and managing director with Global Data, said WHP and Authentic Brands' interest in Champion makes. In August, Barrington sent a letter to HanesBrands chair Ronald Nelson saying the company must immediately focus on cash generation and debt reduction in order to create long-term value for shareholders. A little over a month later, HanesBrands announced it was undertaking an evaluation of strategic options for Champion as it looked to simplify and focus its larger business, while also driving growth and profitability. Meanwhile, Sperry sales have also been sluggish for Wolverine worldwide. During the 3 months ended July 1, Sperry sales dropped to $57.4 million, down 23.5% from the year-ago period. That slowdown has contributed to a fall-off at Wolverine, which saw total revenue decline to $589 million during that quarter, off 17% from the year-ago period. Wolverine stock is down more than 26% year-to-date.